Hi everyone, welcome to another weekly Forex forecast for the week ending February 14th, 2020. In this forecast, we're going to talk about the Euro USD, the Pound USD, the New Zealand dollar versus the USD, as well as the Euro versus the Pound. And we're going to wrap things up with the Pound versus the Canadian dollar. We could have some incredible opportunities shaping up, including the Euro versus the Pound, and also the Pound versus the Canadian dollar, so you're going to want to stay tuned. Quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. So first up, we have the Euro versus the USD, and I want to start with last week's commentary. So last Saturday, I talked about how Monday's open was going to be critical because this rally right here, this candle, occurred on a Friday, and furthermore, it occurred on the last day of the trading month. This was January 31st. And anytime you have the last day of the month combined with a Friday, you're likely to get some crazy price action because volume is all out of whack. You have a lot of funds that are closing their books for the month, so you get moves like this. That's why I said that Monday's open was going to be critical for both the Euro and the Pound. Both the Euro USD and the Pound USD both gapped lower, although the Euro USD wasn't quite as significant as the Pound that we'll discuss next. However, it did gap down on Monday, and it never closed that gap. Furthermore, the pair closed back below this 110.75 area that I mentioned last weekend. And you can see how that move lower on Monday turned into a sell-off that lasted all of last week. Now on Thursday, I wrote about how a daily close below 109.90, which this right here was our first target following the breakdown that I discussed a couple weeks ago. And you can see how the pair did bounce from 109.90 back here. But I've also mentioned how repeated retests of a level often signal an imminent breakdown. And that's especially true given this aggressive sell-off we saw into 109.90. So Thursday did close below that 109.90 level. And the next key support that I mentioned on Thursday was 109.40. All right, now Friday's low was 109.41, or just one pip above the level I mentioned. And 109.40 is significant because you can see that we have not only these two lower wicks back here, but we also have several opening and closing prices as well as this low. So 109.40 support could come into play early this week and it triggers some strength perhaps back into Thursday's low. However, as long as 109.90 is intact as resistance on a daily closing basis, I do favor a lower Euro USD, perhaps down here to the 109 area. Now it's going to take a daily close below 109.40, okay, this area right here where Friday closed, to expose that 10900 area based on some of these 2019 lows. And keep in mind too, guys, that when I say a daily close, I'm referring to the 5 p.m. Eastern daily close because I use New York close charts so that I get 5 24-hour sessions every week. If you're not using a New York close chart like the one in the description of this video, then you probably have 6 days per week or what's called a Sunday bar, and you're not getting that 5 p.m. Eastern close each day, which is going to affect your trading. So be sure to see that link to Blueberry Markets, which are the charts that I use, so that you know you have the proper New York close charts. The British pound against the US dollar played out beautifully for us last week. I talked about this on February 3rd and again on the 5th, how this close, okay, Monday's close took out that November 2019 trend line that I had discussed several times in recent weeks. So this close right here took out the trend line that extends from November 2019. And we also saw the pound gap lower last Monday, and the pair never even tried to close that gap. Yet I saw so many people trying to buy down here and even down here. Yet anytime you see a gap lower like this and the market doesn't even attempt to close the gap and then sells off hard like this, that is not something you want to buy. This right here signals weakness. All right, and not weakness for a day, but most likely weakness for at least a week, if not more. All right, so I was always looking to sell this when I saw that gap lower and the sell off on Monday. And once we closed below this area, and then I saw this Wednesday high spike above this area, I went ahead and got short at 130.44, which I also announced in the members area. I then added to that position when I saw Friday come up and retest some of these lows from back here. All right, so as long as we're below this 129.80 to 1,300 area, all right, right through here on a daily closing basis, I'm going to favor pound shorts for a move down into 127.70, which is the next key level that I've mentioned for weeks now. A daily close below that would take us down to 125.70. All right, so just looking at the broader picture here, given the fact that the pair just closed below this ascending channel, okay, not only did it break this trend line, but it also closed below this channel bottom. All of this could signal a larger rotation, not only down into 127.70, but perhaps 125.70. And there's even a chance that we could see a move down into 123.80 if sellers really get behind last week's breakdown. And one little trick that might help you, if you're ever in a situation like this and you're trying to decide where you should target, you can also use channels for this. So notice these lower highs back in this region. What you can do is, say these two highs back here, you can take a descending channel, and if you connect these two highs up here with this low, all right, you get an area right around 127.70. So that helps to support the fact that the pair may encounter buyers around 127.70 over the coming days. Furthermore, you can also use this larger channel to find a longer term target. Okay, so if we use that instead, you can see how the final target here may be somewhere down here around 125.70, or perhaps the level I just mentioned around 123.80. All right, but I do think that 127.70 could attract buyers if tested in the coming week. That said, I am going to remain bearish here as long as the pair is below that 129.80 area. The New Zealand dollar versus the USD continues to come off of these recent highs up here, and all of this follows the inverse head and shoulders that I talked about quite a lot at the end of last year. So this 230 pip reversal pattern did target that 66.60 area, which was reached up here. Now, this period through here, I didn't talk about the New Zealand dollar much simply because the price action got really choppy. However, ever since the pair closed below 65.70 right here, you can see how the New Zealand dollar has regained that bearish momentum. Now on Friday, I wrote a blog post stating that a daily close below 64.35, which was the neckline of this head and shoulders pattern back here, would signal further weakness and would also expose 63.20. And that's just based on this right shoulder of that pattern, which you can also see how 63.20 served as resistance back here. So notice how Friday did in fact close below 64.35. So this area right here becomes new resistance in the week ahead. So any retest of 64.35 could attract sellers and also push the New Zealand dollar lower into 63.20. Of course, there is no guarantee that we will get that retest of 64.35 before moving lower, but I do favor New Zealand dollar shorts while below 64.35 on a daily closing basis. Alternatively, if we see the pair close back above 64.35 this week or next, so if we get a daily close above this area, that could signal strength and a return to these recent highs somewhere around the 6,500 handle. All right, but again, I do favor shorts while below 64.35 for a move into 63.20. It's going to take a daily close below that to expose these 2019 lows around that 6,200 handle. Next up, we have the euro versus the pound, and I discussed this one on January 31st, which was this low down here. And I said that there was a potential bottom forming here based on the way the Fibonacci levels lined up with some of these key levels I'd already drawn. So if you missed that video, go back and watch that, because I do point out why I thought there was a bottom here. And what I said is that a daily close back above 84.50, okay, this level right here, would mean that that level would turn into support. So the very next day, we got this massive rally and a close above 84.50. I then wrote about the euro pound on February 3rd and again on the 5th. So I've talked about this one a lot, and you can see how 84.50 did serve as support last week. So I remain long here from January 31st, and I also added on this dip below 84.50 on Wednesday. So I remain long going into the new week. And just as I mentioned last week though, I still think it's going to take a close above 85.90 in order to confirm the bottom, because right now we have this rally and we also have a potential higher low back here. But as long as 85.90 is intact as resistance, it's all a bit questionable. So it's going to take a daily close above that to expose higher levels, including 86.80 and perhaps this 8800 area. Now, if you're still looking for a way to play this and you don't want to wait for a move all the way above 85.90, there is also a short-term channel that has formed here that you could play in the coming week. So notice how we have this channel where we had this low back here, this high, this low, and then we had last week's high. All right, so if we start to see a repeated retest of this channel top, so in other words, if the euro pound comes up here and retests this channel top this week, repeated retests of a key level like this signal an imminent breakout. In other words, it's likely that we'll see the pair close above this area and continue to gain ground. So if you're looking for a way to play this without waiting for that 85.90 resistance to give out, you could take a look at this channel and perhaps wait for a daily close above resistance and then maybe take an initial position for a move higher. All right, so that's just my opinion. That's one way you could play it, and that's probably what I'll do. So I'll probably add if we do get a close above this area. So that would be my second addition to my position. But just taking a step back here, looking at this descending channel and the way that the pair is looking like it wants to retest that channel top again, combined with this aggressive rally back here in December, and the fact that we have what could be a higher low forming, all right, I do think that a close above this channel top could take us up to 85.90 and perhaps even trigger a daily close above that. All right, so I still like the idea of the euro pound bottoming, but buyers do need to take out this channel top along with that 85.90 resistance area. I wrote about the British pound versus the Canadian dollar on Friday on the blog, and I mentioned how this rising broadening wedge could signal weakness in the days ahead. Now, this is probably my favorite chart pattern going into the new week, and you can see how we have this broadening wedge where these two levels are moving away from each other. So this is different from a narrowing wedge, which is where the levels come together like this and price gets squeezed into a terminal pattern and either has to break higher or lower. Now, a broadening wedge like this theoretically could go on forever, but we know that that does not happen. And given that this is a rising wedge, again, it is an exhaustion pattern for buyers, so it signals the likelihood of a move lower. But as I mentioned on Friday, this 170.50 to 170.90 area has to break down to confirm the reversal. So until we see a daily close below this area, this is all a little bit speculative. However, notice how we have what could be the first lower high in this series. So this entire uptrend, you can see how the pair has been carving higher lows and also higher highs. Now, if this is a lower high, so if we get a close below this area and start to take out some of these lows on the way up, that would confirm this lower high up here, and it would be the first one in this series. In fact, it would be the first lower high since back here when the pound versus the Canadian dollar was in a downtrend. And a move lower from the GBPCAD would not be all that surprising, considering what we're seeing from the pound, the weakness we see there, as well as the EURGBP, what it did last week. So I talked about this one on Thursday, and I said that this false break above the channel top, all right, so this false break back here, combined with this close back below not only this channel top, but also this channel bottom, signaled weakness. In fact, I said that 14600 to 146.30 was likely to act as resistance. Friday reached a high of 146.13 before sliding lower by about 60 pips. Okay, so weakness from the pound versus the Canadian dollar, would be in line with what we're seeing elsewhere. But just keep in mind that it is going to take a daily close below this area through here this week in order to confirm the breakdown. That would also expose 168.30 and perhaps this 16600 area. Now, this would be my target if we do get a break lower, and that's simply because this is a critical area for the pound versus the Canadian dollar. All right, 16600 is a key level. So just for full disclosure too, I am short the pound versus the Canadian dollar from 172.24. I entered on Friday, and I did announce this in the Skype group that I run for higher net worth traders. So I'm in from up here, and my stop was above Thursday's high. So I've already basically taken my risk off of this trade at the moment, and I'm just waiting for a close below this area before I add to that short position. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.